Welcome back to Trading 360. It's time for the Disruptors. George Tsilis is here, Senior Markets Correspondent with today's Disruptor, and the company is Taiwan Semi. Barclays raising the price target by $20, keeping that overweight rating. It has been a winner year to date. Some of your thoughts on the call and Taiwan Semi?
Well, I think, Nicole, obviously the trend in Taiwan Semi has been actually very nice in the last year. It's up about 52%, and this is essentially the global leader as a semiconductor manufacturer. I mean, it's a manufacturing powerhouse, and I think the aspects behind the secular trends we're seeing help support stocks like Taiwan Semiconductor, include the high performance computing associated with artificial intelligence and data centers. And in fact, Intel has actually conceded in some capacities some of their outsourcing of manufacturing to Taiwan Semiconductor. And if you think about the nature of production, it's actually moving closer to the United States, and the United States government, from a fiscal standpoint or federal standpoint, is providing a lot of support for domestic manufacturers, including Micron, Taiwan Semi, Intel, and so forth. And I think that's another catalyst that supports the stock. Now, if you look at Barclays, they maintain an overweight rating on the stock. They actually had a sort of a low price target of $125. Now they've increased that to $145. And they essentially look at the investments that Taiwan Semiconductor is making, both the United States and in Europe, and they actually see that as potentially a positive catalyst now, because a lot of times when there's a huge amount of capital expenditures, there can be some postponement in stock production. In other words, returns on equity investment over time. But they've actually seen that manifest into positive earnings for Taiwan Semiconductor. They also, as a company, just continue to inch higher their earnings estimates. I covered the stock a few weeks ago, and the earnings estimates were around $6.17. Now they're $6.29 for fiscal year 24, and for 2025, they're over $7.75. So, the stock is expecting to earn, in terms of earnings growth, about 15% going into 2024 and remaining of 2025. But it's trading around 19 times 2025's earnings. So one would say that it's trading at a fair value considering the growth elements of this business, which, again, from the standpoint of its market capitalization of $620 billion, and of course being the global leader in semiconductor manufacturing.
All right. So, and I saw Susquehanna's on board with this too. Put a 180 target up from 160, yes, maintaining a positive. So, with some positive vibes and calls here, tell us about your example trade today, George.
Yeah, so obviously the stock is down, about 1% today, but you have to consider the trend. Obviously the trend is higher, and one day doesn't make a trend change. And if you look at TSM, it's actually pulled back about $20 from a few weeks ago. It was close to 160, but it's still trending above its 10-week moving average. So we're going to play a trend continuation with TSM. We're going to give it a little bit of space in terms of time. And we're going to essentially buy a call spread. In other words, a bull call spread for May monthlies, buying the 140 call and selling the 150 call against it. So altogether, this trade would cost a trader about $4 a share or $400 a contract. So the stock obviously has to move higher for this trade to work out. Your total risk is $4, and your break even is 144 by expiration in 45 days. But you're able to make, if the stock hits 150 or higher between now and expiration, $6. So your return on risk is about 1.5 to 1, but the stock obviously has to go at least to 144 for break even.
All right, George Tsilis, thank you for that. Good to see you. Disruptor every single day, and today's is Taiwan Semi. Thank you, George.